So in this video, we're going to explain the pieces that make up the whole of Ichimoku. And then once we've done that, I'm going to go over the basic instructions on how to actually use it and go about trading it. Now, there's two strategies in particular. There's several strategies overall, but there's two that I like that beginners can actually implement and use right now. And you're going to learn that in this video too. And I'm also just going to kind of go over why I think it's a good thing and a good tool for beginners to use. And I've recommended this to beginning traders quite a bit. But there's reasons why, and I think those reasons why are very important. But as always, before I make these trading videos, I often like to go see what other people's videos on the same subject look like. And as usual, they're pretty boring and tedious and not very helpful. So just understand, compared to most videos you will see on this topic, what you will not see here is other common strategies. There's a lot of different ways you can go with this. We're just going to go over two basic ways that you can use this thing and without flooding you with all these other options. We'll talk about more options next week, but for now we're just going to go over two. Now everybody out there who likes to trade Ichimoku has different ways and theories on how all these pieces are used and how they fit into one another. I get that, but again, it's way too much to go over, especially for people who are just trying to learn this for the first time. Remember that. So I'm also going to keep my overall opinion on these pieces kind of out of the way. Like I said, we're going to discuss all of this next week as we really start drilling down into this thing. But for now, we're just learning how. And I think it's going to be a lot more helpful than most videos are. Sometimes doing the research part of this is pretty painful because I have to sit through these videos. They're way too long. A lot of these are over an hour long to learn something that doesn't need an hour's worth of your time. But they go over dumb stuff. They go over parts that don't mean anything in the end, such as like the history behind it, what all the Japanese translations mean for the lines and how all these lines are calculated. Who cares? It means nothing in the end. Most people coming here to watch a video to learn how to trade Ichimoku are doing it because they want to have success in Forex and make money. And at No Nonsense Forex, because it's no nonsense Forex, these are the things we focus on. So I think you're going to like what you see, and as always, we're going to break it down into smaller pieces to make this whole thing so much easier to digest and understand, so you can just hit the ground running once this video is over and start trading it right now if you wanted to. So let's begin. Now, there are 5 main pieces, I would say, to this overall system, and we're going to go over them now and kind of group them into their own little categories. So the first category is the moving average crossover part. This is where entries are made. All right. I don't know if they're really considered moving averages or not. They don't move smoothly like moving averages tend to do. They're a little jerkier. But just think of this as a moving average crossover because when they cross, that is the system telling you to enter. Now you have the Tenkan-sen, which is the one that moves faster, and you have the Kijun-sen, which is the one that moves slower. Once we get to the chart, you're going to see exactly how these play. But just know, every time I say Tenkan, I mean the fast-moving average. Every time I say the Kijun, I mean the slower of the two. All right, then you move on down to the cloud. The Senku span A and B are the two lines that make the cloud. The lines on their own are not very significant. It's really the cloud that you want to pay attention to when using this system. And what the cloud does is it is there to say whether we are allowed or not allowed to trade in the first place. That is the main purpose of the cloud being there. And if you just think of it in those terms, this whole process becomes a lot easier. People really try to overcomplicate this, and it's just a cloud on a screen. And if price sits above it, you're looking for longs. And if price sits below it, you're looking for shorts. That's really all you have to worry about. And then there's this other piece that some people use and some people don't even bother with. And whether or not you use it is really up to you. It's called the Chiku span, I guess. I don't even know if I'm saying it right. But it's kind of the wild card. People either really nerd out and try to find all these different ways they can utilize it, or they just say, you know what, that line is pretty useless in the grand scheme of things. I'm just not going to use it at all because I'm better off that way. So that decision is ultimately up to you, but we are going to talk about it and show how it does factor in if you choose to use it yourself. So just to make things super easy, we're actually going to start with the cloud. Just so you can see what that looks like and what its main purpose is. I'm going to show you what it looks like on a chart, and then we'll actually go to another slide where you can take notes if you like. So this is the euro-dollar daily chart on MT4, which is the charting software that we use here at No Nonsense Forex. Now the problem is, if I were to just put the whole Ichimoku up on my chart on MT4, it looks awful and very confusing when you're trying to teach somebody this for the first time. So we're just going to break this up into pieces, and by doing that it should be a lot easier to follow along. So let's just keep the cloud on. And as you can see, price is inside the cloud. So if you were getting a signal to go long or short, you still would not take it more often than not, because when it's inside the cloud, that means there's some indecision going on here, and you should probably wait until things are a bit more definitive. This is one of the really good things Ichimoku does. It prevents you from taking trades that are not high probability trades to take. And as a beginner, that is so crucial, because when we first start trading, we want to take everything. But as a beginner, we have no money management, no disciplinary skills, so taking every trade is a really, really bad idea. So what this does, at least, is attempts to keep you in trades that are only going with the overall trend. And the Kumo Cloud, as you see here, is one of the biggest tools that helps you do that. That is its main reason for existing. There are other ways to use the cloud to trade. We'll go over that in next week's video. But for now, just understand its purpose here. You're going to notice it does change colors from positive to negative. That is some other stuff that I don't think works very well, but we will again talk about that later. Just use this as a beacon and say if price is below it, I'm taking shorts. If price is above it, I'm only taking longs. Those are the rules. That's that. So if we move to the dollar-yen daily chart, it's way below the cloud. And so at this point, we are looking for shorts, and we will only be looking for short trades until further notice. All right? The overall trend is absolutely downward. We don't want to fight that. We just want to go with it because it is in our best advantage to do that. And if we get the opportunity to go long down here, we ignore it because it's just not in our best interest to do so. And that's where this cloud comes into play here. So for your notes, these are the overall basic rules of the Kumo cloud in Ichimoku. If price is sitting above the cloud, only long trades are allowed. And we're going to talk about how to find those trades soon. But just know, you're only allowed to take longs if price is sitting above the cloud. And conversely, if price is below the cloud, you may only take shorts and do nothing else. For some reason, price is sitting in the middle of the cloud, like you saw in that euro-dollar example. No trades are allowed. It's an indecision point. And we only want to trade when the trend is moving in one decisive direction. Now, because of these rules, this system can be a bit boring to trade because a lot of times because the rules are so harsh, you're not going to get a lot of trades sometimes. Sometimes you're going to get a lot, sometimes you're going to get almost none. So what you can do, if you're a little more experienced, is if price is actually inside of the cloud, you can take a long or a short trade if the rest of your system gives you one, but just take it at half risk. Risk half of what you would normally risk on a regular trade, because the odds aren't totally against you here, but they're also not completely in your favor. So if you have a good entry system, you can go ahead and use it inside the cloud if you really want to, and you've had a little experience in the past with this, but do it at half risk. It's in your best interest, trust me. So those are your basic rules of the Kumo cloud. So now that we've covered this part here, let's cover this part up here because this talks about where and how you actually make those entries. You have the faster moving average, and you want it to cross the slower moving average. So let's talk about this and let's take a look at this. So we're back on the charts, and this time we're on the euro-yen. I just wanted a cleaner example so this will be easy to see for you. But we got the cloud on. Now we're going to go ahead and add those two other pieces to see how they cross each other and how we determine where our entries are going to be. So we pull this back up, and this is the Chikou span. We still don't want that to show. But this here is the Tenkan Sen, and this is the Kijin. From this point on, every time I explain this in a video, the Tenkan is going to be red, the Kijin is going to be blue. Actually, let's make it a lighter color. Keep it blue, but make it aqua blue so it pops a little better. I know some of you guys are watching this on your phone, and these lighter colors just tend to show up a little better. So we do that, and then once we hit OK, here they are. So you're going to notice the red is definitely the faster of the two, and it crosses the slower at certain points. And that's this indicator telling you where your entries are. Now that doesn't mean you just blindly enter every one you see. The cloud has to come into play too. And on this chart, we're going to talk about an exception to the rule that we haven't really come across yet. So there's another good reason I put this chart up. So let's take a look. You see right here the red crossing up over the blue. So this is a long signal. Problem is, price is well below this cloud. This is not an entry. All right? In the basic discipline, we're going to follow the rules to the letter style of Ichimoku. Even though it eventually went up, took a while, but it did go up, this would not have been a trade. So you don't even worry about this. All right? Now, here's something interesting over here. The very next entry you saw was the red crossing down below the blue. But price was actually going long above both lines. Doesn't matter. If we are doing this to the letter in beginner's mode, we only worry about the fact that this crossed down, but price was over the cloud, so this would not have been a trade either. All right? Over here, price was inside the cloud, and this didn't cross until this candle was finished. So if you would have taken this trade, and you're being a little more laxed on the rules, and you said taking trades inside the cloud is okay, you would have entered right here. Let's see how many pips that would have maxed out as. About 100 pips. So depending on where your take profit was, that could have been a win. It may not have been. But then a true signal occurred, and that was the very next one. You see the red cross down below the blue, which indicates a short, and price just happened to be below the cloud. So that is an absolute entry. I think you would have entered right about here, and needless to say, that would have been a very nice trade. So discipline is your friend here. It kind of knocked you out of a winner. Here was a bit confusing. This was a small win. That's fine. You're worried about these really nice big wins. This is what you want to put in your pocket, because as a beginning trader, you're going to be taking quite a few losses where you probably won't be taking as many later on down the road. So you really want to jump on the chance to get trades like this, because even though all these pips might not go in your pocket, they're going to be able to absorb a lot of losses down the road. And if you are using smart discipline, you are going to do everything in your power to pass up on trades that have a higher probability of losing and participate in trades that have a much higher probability of winning. And this Ichimoku Kinko Hyo system of indicators is designed to put you in those winning situations and keep you out of those other situations where the probability of losing is greater. Now, part of having discipline is being able to look back, and even at these trades that would have made you money, probably, understanding that, you know what, in the end, these were not the most optimal trades to take. Ichimoku has my best interest in mind, and if I just wait it out, I can get into the really good trades when the opportunity presents itself. Now, it might be kind of boring, but at No Nonsense Forex, we advocate you trade all 28 combinations of the 8 major currencies. So because of that, there is a much greater chance that on any given day, you will have the opportunity to enter a trade. And if you're using the daily chart, which we also recommend you do because there are so many benefits to that, I'm going to put the reasons why. I did a podcast on each of those reasons. I'm going to put them down in the description if you want to look at those later. But if you use the daily chart and you trade 28 pairs, even if you don't get a trade entry, it's probably just going to be a matter of 1 or 2 days down the road until you actually get one. And that's good too, because this also promotes discipline and it prevents you from over trading. Smart, profitable traders do not force trades that aren't there. They wait until the right opportunity presents itself, and then they strike. And that's how it's done. So for your notes, here is what you do. When the Tenkan crosses upward over the Kijun and price is over the cloud, you now have the green light to go long. On the other side of things, when the Tenkan crosses the Kijun downward, when it crosses over and below the Kijun, and price is below the cloud, this is where you go short. And these are the main rules of entry for basic Ichimoku trading. Now, before we even talk about that fifth part, that wildcard line that some people use and some people don't, I want to highlight one other piece of this that I think is going to serve beginners very well. And that is the fact that money management, in a way, is already built into this thing. All right? So traders, for losses, always have a stop loss at play. Never enter a trade without having a stop loss somewhere. And if you're confused as to where to put that stop loss, I'm going to include a link for my risk video down in the description as well. It'll tell you exactly how to do it and give you a really good structure on how to figure out your risk and put the stop loss in a really good place every time. So for losing trades, make sure you have that there. But for winning trades, like your trade's winning, now what do you do? You know, how long do I let this thing go? How would I even know how long to let it ride? Well, what you can do if you want, and it's really not a bad way to go at all, just let this winning trade run until price finally crosses and closes beyond the Tenkan the other way. So I'll show you what this looks like. So here on the Aussie dollar daily, got a lot of noise, a lot of trades we didn't really want to take until right here. So you finally saw that separation where the Tenkan had closed down beyond the Kijun. So that would have been, let's see, right here it looks. All right. So you enter short here and you get this nice run. Now, while this is going on, you don't have a crystal ball to see, you know, how far it's actually going to go for you. So you need something to say, okay, once this happens, you get out of this trade. And right here, where price finally crossed and closed above it, is where you would have gotten out. Now, you're never going to get out the bottom. Don't ever think you're going to. That's just not how Forex trading is. But you need a reasonable place, because if you would have waited longer and hoped that this trade would have gone down even further, you'd have ended up losing more profit. So this is good. This is what you want. You want a place to say, okay, price is now probably going to go the other way for a bit, or it's going to stall out. Now's a good time to exit and move on to another trade. And all told, there's over a 100 pip move on the Aussie dollar. Most people would have gotten profit out of that. But if you currently do not have a system for managing winning trades, you could do a lot worse than this. This is pretty good, especially for beginners. And incorporating it into your trading means you just have one less thing to worry about. All the crazy emotions we have swirling in our head once we're in a really great winning trade can be overwhelming. And sometimes we just need someone or something to tell us, okay, let me know when this trade's over so I can close it out. And that is what Ichimoku can do if you know how to do it right and if you allow it to do its job. So moving on, let's talk about that wild Chikou span. This is that fifth piece of the Ichimoku puzzle that we have yet to talk about. So all it is, it's not any more complicated than this. 26 candles behind where price is right now. All you do is plot a point at the exact price that you have right now. And you just do that every single time there's a new candle. And then over time, a line will connect those points, and you have the Chikou span. Now, if that's confusing and you don't understand what it looks like, let's go take a look at it before we go too far into this slide. So I'm here back at the Euro-Yen, but we're on the weekly chart. I had to find a situation where we are just about to get a trade, so we can check the Chikou span to see if it allows us to do that. So as you can see right here, I'll zoom in to make it easier. We are going to wait for this candle to form. And if after it forms, this red, the Tenkan, has crossed below the Kijun, we have a short trade because price is also below the cloud. Now, if we wanted to add one more layer of discipline and security onto our trading, we can go ahead and add the Chiku span here if we wanted to. So we'll go ahead and make it yellow, nice and bright, and just add it on. So like I said, 26 candles behind price. Price is right here on the line, and if you just go 26 candles back, you will have this. And this was the case yesterday and 26 days before everything else. That's all it does. It just traces that point in time, 26 candles before where price is right now. That's it. So how you would use it is you would also say, hey, where is the Chiku span? I want to go short. It needs to be below the cloud as well. If it's not, I'm not going to take this trade. But in this case, it absolutely is. It's right here. The cloud is way up there. It's well below the cloud. We're going to wait for this candle to close at the end of the week. And when it does, if all things remain where they are right now, we officially have a short trade on the Euro-Yen weekly chart, and we are allowed to enter it. You will run into situations where the Chiku span is hiding inside of the cloud, like probably right here. You probably have the Chiku span more inside. Or sometimes it might even be above the cloud. And if that's the case and you're trying to take shorts, you are not allowed to trade. That's going to knock you out of some good trades sometimes. But at the same time, it might also keep you out of really bad trades. Now, if you really want to nerd out, there's a lot of other ways to use this thing, but the basic way to use the Chiku span when trading basic Ichimoku strategy is this right here. We not only want to trade trends, we want to trade trends that have been trends for a while, and that's where this line comes into play. So for your notes, just know it's completely optional. A lot of people don't use it at all. Some people love it. Totally up to you. But if you're using it, it must be above the Kumo cloud if you are allowed to go long. And it must be below the cloud if you want to go short. If it is not, you pass on the trade. But it is yet another piece of the Ichimoku puzzle that is there to help prevent you from taking trades that are not completely optimal trades to take. All right, so now you know the pieces. Now you know their main intention, and you have a basic strategy set up. And this strategy really is great for beginners. It has everything. It shows you how to enter trades. It even has some built-in money management and a lot of discipline already built in to one overall system. And really, the big piece there for me is the discipline piece. People don't even know. You could have the best system ever created. If you don't have discipline in your trading, it doesn't matter how good that system is. And beginners almost never have it. And this thing forces you to only take certain trades. And I think that is the best part about it overall. It eliminates that temptation to use other tools as well. Ichimoku traders typically just trade Ichimoku. And one of the benefits of that is it eliminates all the noise of all the other possible tools out there you can use. And in doing so, it just gets you used to trading. It gets used to looking for entries. It gets you used to passing on trades that are not in your best interest. And by doing this and having this already figured out for you, you can more focus on how to enter a trade on your platform, how to manage a trade, all those little things that you don't want to be fumbling with down the road. Now, is trading basic Ichimoku strategy going to get you to the promised land someday? No. I would be shocked if there's anybody out there trading at a pro level that is trading this way. However, most beginning Forex traders are complete toast before they even start because they're so all over the place. They never learn how to stay in the pocket and just trade something that makes sense and that already has money management and discipline tools built into it. This is a great way to start trading. And if you do this right and you don't deviate from it, you should see results. But one thing I want to make sure you do when you are starting this out, Set the rules you want to follow. Are you going to use the Chiku span? Are you going to trade when price is in the cloud? How are you going to approach this? You set these rules early on, and you stick with them. Don't all of a sudden loosen up on your standards because you're bored and you want to take a trade just for the hell of it. There's no way to know how good your trading can be in this system if you start doing things like that. So have rules, stick with them, and track your progress. Do this for a while. See how it turns out. It might turn out great for all I know. I mean, I don't know anybody who's trading basic strategy who's doing really well, but, there's millions and millions of traders out there. I don't know all of them. I only know a small fraction, and that's not a great sample size. So if this way of trading is something you want to try, and I think if you're a beginning trader, you certainly should, give it a go. Just do it the right way so you can actually see what real results look like here. All right, so in conclusion, I do like this for brand new traders, but there are so many other approaches to this style of trading. I know there's people watching this video right now that are screaming because there's so many other things that I'm leaving out. I'm going to get to those in the next video, and I'm still not going to be able to touch them all because there's a lot of different avenues you can take here. But when you're starting out, keeping it simple and basic is absolutely the way to go. And then afterwards, if you still like the Ichimoku style of trading, you can branch out into different methods. And just know there are many different methods, and a lot of those methods are a lot better than the overall basic strategy. But if you start jumping into those too soon, it's going to mess you up. So start trading basic strategy. And in the very next video it's June 5th, 2019. So if you're watching this in the future, chances are I have the second part of this Ichimoku series already finished that talks about some of the other approaches and the approach that I personally like myself. And I will put the link down below in the description and also on the end screen of this video so you can just go straight to it. But if that video interests you and you liked the way I